So you're new today trading and you have a very small amount of money in your account and you want to grow it as quickly as possible. I get it. Not everyone has $10,000 to start with. That is why in this video, I'm going to show you how to trade with just a small starting amount of $100 and grow it efficiently into a thriving account, whether it's crypto stocks, Forex, commodities, etc. If you like the content that I'm creating for you, I would be really happy if you just support me by liking this video and sharing it with your friends. That will help me because by liking the video, the YouTube algorithm is going to show this video to more traders and people like you who are keen to know all about how to become a successful trader. And I'm here making content daily. So you won't be missing anything. And please feel free to ask me any questions in the comments. I would be really happy to come back to you as soon as possible and answer your questions one by one. Let's dive straight into it. The first topic we're going to talk about is how to get the most out of your risk-reward ratio. So open up TradingView and open up any chart, any time frame, any pair that you want. It doesn't matter. Here we have our chart. The red line is our main support. It's very strong and the price has bounced off it multiple times, making it very reliable and will have similar tendencies in the future. The white line is acting as our resistance and somewhat of a weak support. This is because you can see the price resisted off this line a couple of times and even bounced off it once. The green line is our profit mark. Last we got this line by going on the daily time frame and finding a key level of resistance. Okay, that we know what all these key levels are. Think to yourself, what would you do? Where would you enter the trade? Where would you set your stop loss? These are some questions you should be asking yourself. What I see a lot of beginners doing is they will do the obvious, and that is they set the entry point right above the white line and they set their stop loss below the strong support. And of course they set their take profit target at the strong resistance, giving them some amount of profit ratio, as you can see on the chart. Now, as I'm saying this, you might be thinking, well, I don't see anything wrong with this strategy. The key concept this specific trader is missing is the concept of getting the most out of your risk reward ratio. So this is how much this person is getting for each dollar that he's going to risk, which isn't bad, but it could be a lot better. Let me show you how. We are going to keep the same support resistance and take profit line. The only thing we are going to add to this strategy is a little bit of patience. One of my favorite quotes in trading is that trading is patience people taking money from impatient people. And it is so true. And instead of entering when the price breaks through our white resistance line, we are going to wait for a pullback to happen and bounce off our line. You might be saying to yourself, why would we wait for a pullback if we are entering at the same price anyway? The answer is taking advantage of your risk reward ratio. We are not able to set our stop loss below the white line because there are not enough key points to make this a strong enough support. Sure, there are a couple, but not enough to make it a strong one. But if a pullback happens and bounces off the white line, we can now consider that line as strong support and set our stop loss below that rather than the red line. Let me show you what I mean. So instead of entering when the price breaks through the white line, we are going to be patient and wait for a pullback to happen. We wait a bit and see a pullback occurs. This is extremely good news because first, the price respects this level and bounces off it. And second, creates a couple more key points, making this a more reliable level. Why this is important, because we can now raise our stop loss below this level. We were not able to do that before because it was not strong enough, but now that we see it's reliable, we can do so. We now have our stop loss below the white line. We are going to keep our profit mark, the green line, at the same spot. Now, the next thing you might be asking is, all right, we moved our stop loss up. What's the big deal? The big deal is now that we raised our stop loss a considerable amount, instead of having the previous profit factor, we have a new one, which is a lot higher. So now we are getting more profit for each dollar that we are going to be risking compared to the previous strategy. We now have a way higher risk reward ratio, which will help us so much in the long run. I know it's a slightly confusing topic, but it's such a crucial thing to understand when you first start trading and will pay off throughout your trading career. I've got some exciting news for you. Bybit is the crypto exchange everyone's talking about. Imagine earning up to $30,000 in deposit rewards, enjoying zero maker fees for the first 30 days, and trading with the lowest present fees in the market. Yes, it's all possible. And guess what? Bybit is among the top 3 global crypto exchanges. So why wait? Click the link below and dive into the action. Trust me, every trader needs to be on Bybit. Don't miss out. Let's make those trades count together. The next crucial tip I want to understand is the powerful concept, knowing how much money to risk per trade. All these financial gurus and YouTube or even Wall Street bets tell you ways to double or triple your account within 24 hours. While the profit may seem very glorious and heavenly, the profit percentage is not everything. It's all about the amount of successful quality trades you make. Let me show you an example. So in this case, Trader 1 is the group that I was talking about before. We gave them a starting balance of $100. They have a profit target of 20 per trade, which is not only risky, but you are going to find way fewer trades like that per month. So in this example, let's say I give them 6 trades per month. This is saying if all 6 of the trades were successful, which I'm not even including any risk, and even finding 6 trades a month with a 20 profit is pretty hard, but we'll give them the benefit of the doubt. This specific trader would have made something around $200. Then we have Trader 2. We also give them $100, but we are setting the profit target at 2. This is not only way less risky, but this trader will be able to complete a lot more trades. So this trader was able to find 150 successful trades per month because the profit target was so much lower and doable. Even though Trader 2's profit ratio was almost 10 times lower, this still made almost $2,000. The key concept I want to take away from this is you shouldn't be worried about how high your profit percentage is. You should be worried about consistency and the amount of successful trades you can accomplish. My third final concept I want to share with you guys to help you grow a small account, whether it's stocks, Forex, crypto, etc., has to do with risk. Let me explain. Going back to the trader who risks 20 of his account per trade, even though they would make 20 if they won, they are still risking 20 if they lost. If we are risking high amounts of money per trade, you are better off going to a casino and gambling because that's basically what you're doing. If you truly want to grow your account, you have to aim for longevity and consistent profits. The reason trading with high risk is a problem is because of consecutive losses. I don't care how good your trading strategy is. Every strategy is going to have consecutive losses. If you have 5 to 7 losses in a row and you're risking 20 per trade, your portfolio is going to go down the gutter quickly. This is exactly why it is recommended that you risk 1 to 2 peer per trade. So to wrap it up, I want to tell you that I don't want to say it's not important, but you can be successful almost with any trading strategy, whether it is indicators, whether it is no wave trading, whether it is price action, XMEC, whatever you've heard out there, Chimaku, whatever it is, you can be successful. What matters more than anything is the money management, risk management, and your psychology in the market. How to be patient, learn from your losses, try to raise your weak points and add some good points to your strong points. Here's a video that I talked about previously. It's almost an hour of video in which I've told you everything you need, and it doesn't matter which market, which time frame, which asset, or what type of trading strategy you have. It's going to work out like crazy good. You don't need to read lots of books. This video is basically from the best books and articles out there that can help you. I broke it down in this one video. So if you watch it, I promise, I guarantee you're going to be successful. Plus, the fact here's a playlist that you can watch. There are tons of good trading strategies. You can watch the video on risk management and money management. And you can mix the knowledge that you have in there with any trading strategy I have in this playlist, and believe me, you will come back to me and thank me soon. Thanks for watching, and I'll see you guys next time.